The other thing, part of the buying that I want to just cover for a minute, there's a page that says understanding agency. Agency is a legal term, and agency in the state of Michigan means that as a buyer, you can basically hire a contract with a real estate agent to represent you. And this diagram here is to show you how what the process of agency is. When you have seller agency, the real estate agent is representing the seller. They have a contract with the seller to help them sell their house. A buyer can have a contract with an agent to help them buy a house. So the goal is to have each party has their own representation. Every once in a while, you run into a situation called dual agency. And it doesn't happen very often anymore, but every once in a while, you call an agent and you start looking at properties. You like that person, you hire them as your agent. By the way, the fee is paid by the seller. You hire them, and as you're looking at homes, one of the homes that you look at that you really like happens to be for sale through that agent. So then you have an agent who has a contract with the seller, an agent who has a contract with the buyer. And that's called dual agency. And the goal of the agent in a situation like that is to allow both parties to talk to each other, but they're not going to be able to tell you as much, and they're not going to be able to represent the seller as much. So their goal is to help the two parties talk to each other, but they're probably not going to be able to give you, they're not going to say, well, I bet if you did this, the seller would take it. They're probably not going to do that. You know, they're going to say to you, well, you've looked at all these homes, and it's your decision. What do you think, based on what you've seen, you should offer for this house? Okay? But the goal is to get the house sold. And the goal is for you as a buyer to take another step toward your dream. So I want you to be aware of it because it's something that you will find yourself signing when you decide that you're going to sit down and buy a house. And it's a state disclosure form, and it will tell you what the different roles are of real estate agents. So when they talk about that, when you see it, that's what that's about. Okay, reasons to buy a house, how much can you afford? There's a whole lot of information here, and the last few pages are a glossary. So, you know, every business has its terminology. Hopefully the last 3 pages will help you with understanding the real estate jargon that we use, and sometimes we forget to tell you what it is that we're talking about. So I'd like to open it up for questions now. I'm interested in knowing what that question is that was on your mind when you came tonight that you absolutely positively wanted to ask. The question is, with the economy the way it is right now, are lenders pushing people to put as much down as they possibly can? I think lenders are more conservative now in how they look at each buyer. They want you to put enough down so that you can get the loan. And obviously the more you put down, the more comfortable they are, the happier they are, and it makes the process a lot smoother. For a while you may have heard press that you have to have at least 10% down or 20% down. There are some institutions that have programs like that, but there are also FHA programs, which are great for first-time buyers, where you can put 3% down. So it just depends on your comfort level in some respects. How big a mortgage do you want? And with the stock market or a 401k not doing anything, maybe you're better off to get a lower mortgage and be more comfortable, not worried so much with what happens with your income. So, you know, it's a case-by-case basis. Everyone's position is different, and some people talk to their financial planners to figure out what's best, figure out what mortgage product is the one that's going to be most comfortable for you. Because generally speaking, most lenders want you to spend no more than 25% of your gross monthly income. So if you think about what you make, gross means before they take out any of the taxes. If you divide that by 4, figure out a quarter of that. That's a conservative, acceptable qualification amount. You may not be comfortable with that. I mean, I've worked with people who spend a whole lot more than that in rent and don't understand why the bank won't allow them to spend more. And then I've worked with other people that go, oh, you gotta be kidding me. There's no way I would spend that much on a monthly basis. So, it's a combination of financial programs and your comfort level. Putting 20% down is great if you can come up with it. Makes the whole loan process a lot easier. But that's a lot of money for a lot of people to come up with at one time. Or you may have it tied up someplace else and not really want to liquidate that money. But if it's not doing anything, in terms of interest rate, I got a 1.5% at the credit union today on a little bit of money. I thought, woo-hoo-hoo. But something is better than nothing. You need to think about how you want to use your money. Okay, another question. The question was related to private mortgage insurance and what is the percentage of your mortgage balance that they use. Again, they take your mortgage balance, there's a percentage against that they use for creating whatever that insurance amount is. And it varies depending on your credit score. It depends on how much you're putting down. If you, I think it's different, 5% or 10%. At 20%, you don't have to worry about that because the bank is comfortable with you as a buyer. They think if you've got 20% interest, you're not going to walk away. And right now, more than ever in the 25 plus years that I've been in the real estate business, the concern is people walking away. So the more you put down, the more comfortable they are with you, the less likely they think you are to walk away from that money that you've put into the house. The question was related to private mortgage insurance and what is the percentage of your mortgage balance that they use. Again, they take your mortgage balance, there's a percentage against that they use for creating whatever that insurance amount is. And it varies depending on your credit score. It depends on how much you're putting down. If you, I think it's different, 5% or 10%. At 20%, you don't have to worry about that because the bank is comfortable with you as a buyer. They think if you've got 20% interest, you're not going to walk away. And right now, more than ever in the 25 plus years that I've been in the real estate business, the concern is people walking away. So the more you put down, the more comfortable they are with you, the less likely they think you are to walk away from that money that you've put into the house. So, but there are some incredible buys out there right now. I'm just amazed. I am just amazed.